Hey guys, I think we're gonna get started. So welcome back. So we in the second half of your CETA year. So in Mac, you start now with cost accounting. So we're gonna go through the question, and then as we go through the question and answer the question, I will give you some background and a high-level overview relating to cost accounting. Cost accounting is much easier explaining when you do a question. So I will, as we go through the question, I'll give you a high-level overview. But tonight, we'll be covering your cost allocations and your costing systems. What is important to note that the cost allocation and costing systems is basically pervasive. It gets tested throughout cost accounting, whether you aware or not aware. Okay, so remember your costing systems is your variable costing system and your absorption costing system, or your direct costing system and your absorption costing system. You must know the various terminology for the different systems. So for example, for the variable costing system, it can be called variable costing system, direct costing system, marginal costing system. Okay, same thing. For the absorption, they'll say absorption costing system or the full costing system. So you might just be aware of those terminologies. Okay. What you must know, under the absorption costing system, there's a further split into two. So you have the absorption costing system where you allocate overheads, or you allocate fixed overheads using the traditional costing method. And you have the absorption costing system where you allocate fixed overheads using the activity-based costing method. Okay, so just be ABC. So just be aware of that. So we will go through it high level as we go through it, and I'll point out some important aspects that you need to be aware of, and I'll also point out important terminology you must look out for. Okay. And hopefully that will help you to navigate a management accounting or a costing question. So that is for tonight. So welcome back. I hope you guys are feeling good and you are ready to go into the last stretch. So you already wrote test 1, you already wrote test 2. So now we're going in for test 3 and then finally test 4. I have sent you a planner, a weekly planner, where what question we'll be covering today, and then what you need to do for homework. So I'll tell you when you must submit to me. What I would do, I'm not going to mark every single week, right? But I will ask you to submit something, and I will do a quick high-level check. If there's something specific that you don't understand, you might let me just note it so then I can look at it specifically. But I'll just look at it generally to see. It's basically what I'll be looking at: how you set out the question, how you're answering, and I'll try to identify your pick up your thinking process. And that is important, that for me to help me pick up, to identify and see your thinking process, you need to systematically put down everything. But remember, you need to answer it how you will be answering in the exam. That is critical. Please don't do a question while you're studying by just writing on the back of the envelope. Okay, so make sure. So I'll tell you which of the two questions you must do for, obviously both questions you must do for yourself. But one of it you will submit to me and I'll do a quick high level check. Okay, so just be aware of that. We will go into, I'm going to stop my screen now, and then we will we'll read through the scenario, and we will cover and we will respond to the required. This is slightly different to financial management. Financial management's required is fairly straightforward. Okay, calculate WACC, help management decide on a long-term investment, quite straightforward. With cost accounting, you just need to read very carefully certain information, because that will help you to navigate, that will help you to know where to look for information in a scenario. So I'll point it out when we read the required and try to make a practice of doing that. Okay. So I'm going to switch my screen now and then we're going to work through it. I'm just quickly sending one of the students, I think they never got the email. I'm just quickly sending it to one of the students quickly. Just give me a few minutes. Okay. Okay, so you should be able to see the scenario. We're going to work through it. As we work through it, we will we'll explain some theory. Okay. So I know everyone, just who is this now? Who is Lucky or Luki? I don't know. Okay, so she what you call it. Okay. You can just tell me who, so I know who I'm, so if I address you, then I know who I'm addressing. So you can just let me know, even in the chat, it's fine. Okay. So question 1, this is a MAC 4862 test 3 question paper, test 3 of 2019. So that is 2 years ago. So I'll be reading this 1.5 pages. You will see that it's just 3 requires. 2 out of the 3 requires are quite big. And it's quite similar if you look at 2018 as well. Okay, so just be aware, try to pick up some patterns. I'm not saying spot, I'm not saying that, but I'm saying pick up certain patterns and make sure you understand the core, because by understanding what they test, you will see what is very important. Even if you look through your psyche and all of those type of stuff, you will see what is very important. Okay. So they say Steyn Sasa Industries, SSI, is a large scale manufacturer of household goods and furniture. So they are a manufacturer. What you will start to see that in many cases, in management accounting and cost accounting, you'll be dealing with a manufacturer, okay, or a construction person. So basically where they produce something, okay, as opposed to Pick n Pay and ShopRite. Pick n Pay and ShopRite doesn't produce anything. They buy completed products, okay? So just be aware of that. So SSI is a large-scale manufacturer of household goods and furniture. 80% of SSI's revenue is derived from government contracts, and the remaining portion consists of sales to private consumers. So now you can see, if I must give you a strategy question, 80% is from government contracts, 20% is from private consumers, whoever that is. Okay, so just be aware of that. If you want to link this to auditing, 80% from one entity is quite high. Okay, so that is a high risk from an auditing perspective. Teddy Great, company CEO, prides himself on his extensive business network contacts, as can be seen from his Instagram profile, where he is regularly invited to high-profile parties and government functions. Just so you know that in the accounting profession, it has always been there, but due to the last few years of of news and events that took place, it's going to be there even more. Okay, what is that? Ethics. Okay, so ethics is huge. Now, ethics will generally fall into one of two categories. It will either fall into a MAC or into auditing, generally. Okay, I'm not saying it can't go into tax and whatever, but it will generally come across there, because remember, the topic in MAC is strategy, risk management, and governance. So governance deals with the ethics aspects and so forth. So when you see people involved with government and high profile stuff, you must just start ringing, bring alarm bells. Okay, I'm not saying that's going to happen here, but it's just to pick up triggers. I'm not saying overthink, but don't also underthink. Okay. The Eagles, a specialized anti-corruption policing unit, were planning to raid for investigation the offices of SSI after receiving an anonymous tip. The administration building, which also housed the finance department for the SSI group in Braamfontein, burned down prior to the raid. Okay, dodge. Destroying most of the accounting records and other documentation. SSI did not have any electronic backup of the data. You must know that is a problem. In terms of the Companies Act, you're required to maintain records for at least 5 years. Okay, so that is already breach of the Companies Act. Just so you know, okay, not going to be required for this question. But there you can already see the ethics issue over there. Okay, why they bring it in, I don't know. So Smart Furniture Division. Smart Furniture is a division of SSI which sells designer couches to millennials with built-in electronics. Okay, so sells couches to millennials. Charge Couch is an entry-level product covered in premium material which has built-in charging stations for cell phones. Smart Couch is the luxury option covered in A-grade full grain leather. In addition to the Charge C functionalities, the Smart C also has Wi-Fi and Bluetooth speakers. Okay. So we now in costing, you must now think big picture of costing, right? So we know we're only dealing with test 3, but ultimately at the end of the year, it's going to cover test 3 as well as test 4 components. When you see the term division, it's not going to be applicable here, but when you see the term division, must be on the lookout, because it can lead into 2 types of questions, right? Number 1, it can lead into a transfer pricing question, and it can lead into a performance management question. It's not going to happen here, because that's only for test 3 purposes. But when you see the word division, when you see the terminology, getting to my head now, division, decentralize. When you see the terminology division and or decentralization, you must already be, your mind must trigger that we can go into a transfer pricing, performance management type of question. Not applicable here, because it's not part of the syllabus for test 3. But when it comes to test 4, that will be. So these kind of small terminology must be able to help you navigate which topic you're going to be dealing with. So in that paragraph, what you must understand, you have SSI, which is the company, whatever the name is. So SSI, that's the company. One of the company's divisions is called Smart Furniture Division. Okay, so you must already picture or draw on your page SSI, that's the company, a division which is Smart Furniture Division. Then below Smart Furniture Division, you draw the 2 products. So they have the Charge C, which is a Charge Couch, and they have the Smart Couch, which is the Smart C. That's the 2 products. When it comes to management accounting, you want to make sure you are clear on the products that they produce and sell. Okay, so we are clear that there's a smart division, Smart Furniture Division with 2 products. Then there's a SF's financial department. So who's SF? Smart Furniture. Smart Furniture's financial department was also based in Braamfontein office and has lost most of its information and data. The accountant was preparing the 2020 budget based on 2019 actuals. Budgeting is one of the topics in your for test 3. Okay, remember there's many ways of budgeting, but one way, a typical way, is where you use the prior year as your base, and then you work from there. And then another approach, which is probably one of the better approaches, but is time consuming, okay, and that is known as zero-based budgeting. So many companies have implemented that, like for example, at Old Mutual, when the new CEO, Peter Moyo, the guy was when he was in the news, right? That guy, when he was there. So remember what happened with Old Mutual? They removed themselves from the UK, and Old Mutual is now a separate legal entity on its own, listed on the JSE here in South Africa. They are not part anymore in whatever's happening in the UK regarding Old Mutual. So as a result of that, what they did was, when they did budgeting, they implemented a zero-based budgeting approach where you start from scratch. So you have a look what cost your company will incur. You don't think about last year. You start from scratch, identify your cost, and then work from a base from there and use that as the base. Remember that there's lots of the advantage of zero-based budgeting. So why this is important, they tend to ask you disadvantages and advantages of zero-based budgeting versus starting of last year. So zero-based budgeting, it is the disadvantage, time consuming, okay? And then also certain departments don't know really about budgeting, okay? So it's difficult for them. So therefore, do you have the resources to actually implement resource budgeting? Like you probably have to have finance involved extensively. So you might not have the resources and it's time consuming. The great thing about it is you're starting from a zero base. So you can actually work out, you can actually identify all your actual expenses, all your actual costs, and then also put a real number to it. That is the benefit of it. With the one they're using over here, they're using 2019 as a base, the prior year as a base. The advantage is very quick, okay? Disadvantage is doesn't provide a true picture. Okay, it doesn't provide a true picture, and you can basically bring through inefficiencies. So a typical problem with last year is as follows. You get a budget this year. Okay, so we in 2019, we get a budget. End of the year comes and you didn't use your budget. The problem with that is next year, they're not going to give you a budget because you said you wanted 100,000 Rand for training and development. Come the end of the year, you only use 20. You didn't use 100. So next year, they'll say, okay, we gave you 100,000, but what did you actually use? You actually used you actually used 20, so we're only going to base you on 20,000. Now management knows that. The management of the department knows that. So what does he do? He makes sure he utilizes that budget. So what's the problem? By basing on last year's budget, managers is just going to use the amount, whether it actually makes sense or not, just because they're afraid next year they won't get the budget again. And that is a common, I've seen it. I've been in financial accounting departments. I've seen it happen, that you just use the budget just because you don't want to lose it out next year. Now, the problem with this, if they give you a capital budget, they give you a budget for capital expenditure. You say you're going to use R1 million. End of the year, close to the end of the year comes, and you only now use 500,000. You know next year you're going to need R1 million, but because you only use 50% of what you asked for, they're only going to give you 50% next year. So what do? You utilize it on any capital expenditure, even if it results in destroying value for a company. So just be aware of that. Those are the advantages, that's disadvantages. It's a common question that comes through, maybe not from UNISA, but I've never seen it in a UNISA question yet, but I've seen it often in an ITC exam, when they ask you, dear student, please comment on the profitability of the company, right? And it's a lot more deeper than just doing profitability calculations. And it can be like 40, 50 marks. The questions I've covered, there was 2 questions I covered of that, I remember, 100 marks each. So it's not an easy question. So you need to start thinking of advantages and disadvantages. So why I'm mentioning it over here, it is part of test 3 syllabus, probably a 5-marker question. They're going to ask you big marks, but you must be able to know the benefits. And and more importantly, in the real world, it's actually taking place. If you might just Google McKinsey, so I, McKinsey, coming to my emails, and not this, earlier this year, been 20, yeah. So earlier this year, there was quite a few articles around zero-based budgeting. It's part of our syllabus. So just take a note, it is topical, it can come through. You don't have to stress about it. You don't have to do zero-based budgeting. You might just know what it is and know the advantages and disadvantages, and then relative to other budgeting techniques. So the other approach is where you use your prior year and adjust it for the current year. Okay, so just be aware of that. So they say, fortunately, the accountant emailed the 2019 actual financial profit statement to management the day before the fire as follows. Okay, so this is the 2019 actuals. We probably going to have to come up with budget, so just be aware of that. So the actual 2019 numbers. So we have revenue. So charge C, smart C, it's in the rand thousands. So here we have revenue, and we must look at note number 1. Here we have cost of sales. So here we have cost of sales, and it's made up of production costs, and it's made up of closing inventory. And then we have gross profit. Then we have selling and administration expenses, and we have net profit before tax. So there's note 1, note 2, note 3, note 4, and note 5. In the question, when you're dealing with management accounting, there's one thing you want to be able to pick up in a question, in most cases. Which costing system is being used? The direct costing system or the absorption costing system? Over here, they never told us. Nowhere in the scenario they said absorption or variable. They never told us so far. But when you see the word cost of sales, when you see gross profit, you must know the company is using the absorption costing method. So just take note of that. So what is the difference between absorption costing method and the direct costing method? The absorption costing method and direct costing method, the only difference relates to the cost of a product or the cost of inventory. Product, inventory, same thing. In accounting, we say inventory. In management accounting, we say product. So the cost of a product, the only difference between absorption and variable is fixed overheads. In the direct costing system, we don't allocate fixed overheads. In the absorption costing system, we do allocate fixed manufacturing overheads. So when a question says, dear student, please determine or please calculate the cost of a product, what must go through your mind? You must tell yourself the cost of a product is made up of 3 things: direct material, direct labor, and manufacturing overheads. But then you must tell yourself manufacturing overheads has 2 components: variable manufacturing overheads and fixed manufacturing overheads. So the question would be, which overheads do you include? Only variable or both variable and fixed? And the answer would be, it depends. What does it depend on? It depends on which costing system. So if you're using the direct costing system, the variable costing system, the marginal costing system, then the cost of a product is 3 things: direct material, direct labor, manufacturing overheads. But which manufacturing overheads? Only variable manufacturing overheads. if the costing system is the absorption costing system, the full costing system, then the cost of a product is also three things: direct material, direct labor, manufacturing overheads. But which manufacturing overheads? It is both variable manufacturing overheads and fixed manufacturing overheads. Very important. Please remember, the costing system got to do with the cost of a product, with the cost of inventory. Please make sure you keep that. You're going to see as we do more hectic questions, it will be easy to confuse certain stuff, especially when we come to CVP. Then I've seen many students get confused over there. So please make sure that when you think about a cost of a product, you're thinking about three things: direct material, direct labor, manufacturing overheads. Remind yourself, manufacturing overheads is made up of variable as well as fixed, and it depends on the costing system which of those you include. So please take note of that. Let me just, sorry, one of the students are just got the wrong invite. Let me just quickly send it to them. Now there's sitting also to one of the students quickly. Okay, so let's get back. Okay, so let's just be very aware of that. Okay, so let's move on. So now we go to the notes. So for the notes, let's say the budgeted sales units for 2020 will be the same as the actual sales attained in 2019, which were 243 and 129. Okay, remember in the real world, typical, your budget for next year is never going to be less than the prior year. Okay, they're hardly going to want that unless they know there's a big problem, then they will, but otherwise they will always aim for at least what they have attained in the last actual year. Okay, so therefore we understand what is budget. So remember, budget 2020 sales is actual 2019 sales. Okay, so just keep track of those type of information. Due to new production techniques expected to be implemented in 2020 financial year, the variable cost of production will increase by 5%. Due to new production techniques expected to be implemented in 2020 financial year, the variable cost of production will increase by 5%. Okay, so as you can see, production costs is that amount over there. So let's say it's going to increase by 5%. So all we will do, we'll take that amount and multiply it by 1.05. Okay. Note number 3, the furniture division did not budget to have closing stock. However, they have experienced a decline in sales towards the end of the 2019 financial year. Subsequently, the closing inventory based on actual production was 10% for charge C stock and 14% for smart C. The division will amend the production schedule for 2020 so that no closing stock will be on hand if the budgeted sales materialize. Okay, so now we know this opening. So 2020 will have opening inventory. Why? Because 2019 had closing inventory. 2019's closing inventory are those percentages based on production, okay, actual production of 2019. So we'll have to have a look at note number 4, I guess, to find out what was actual production. So fixed manufacturing overheads are currently allocated based on labor hours. Very, very important when it comes to costing, to management accounting. What's important to take note in management accounting is the following. Remember, you have two costing systems. You have the direct costing system and you have the absorption costing system. The absorption costing system includes the allocation of fixed overheads to the cost of a product. Not any fixed overheads, only fixed manufacturing overheads. Okay, so remember, the absorption costing system includes the allocation of fixed manufacturing overheads in the cost of a product, and that is the difference between absorption costing system and the variable costing system. Now, the absorption costing system is broken up into two aspects. So you have the absorption costing system where fixed manufacturing overheads are allocated using the traditional costing method. And then you have the absorption costing system where fixed manufacturing overheads is allocated using the activity-based costing system, okay, method, ABC. So just take note of that. Now, the traditional costing method is what you have always been doing, allocating overheads based on labor hours, labor costs, machine hours, material costs, or units of production. So what you must understand, under the traditional costing method, the way you can allocate overheads is one of two ways, either using an inputs method or output. Output is if they allocate overheads based on units produced. If they allocate overheads based on direct material costs, based on labor costs, based on labor hours, based on machine hours, any of those are inputs into the production process. So those are inputs. Okay, so just take note of that. So here you can see fixed manufacturing overheads are currently allocated based on labor hours. So it's an inputs basis. It's based on labor hours. Very important. Being able to pick up whether it's an input or an output, it's going to play a significant role in standard costing. Standard costing is for next test 4, but please note, we need to take this knowledge through into test 4. So whatever we're going to need to know for test 4, even though it's not testable now, I'll make mention so you are aware of it from this moment onwards. So just be aware of that. Okay, I'll show you the formula, how to work out your overhead rate. Historically, the production process required 4 labor hours for charge C and 8 labor hours for smart C, calculated at 750 Rand per labor hour. Okay, so they say the production process required 4 labor hours and 8 labor hours. Okay, actual production quantity was equal to budgeted production quantity for 2019. Fixed manufacturing overheads is budgeted to increase by 8%. Okay, so fixed manufacturing overheads is budgeted to increase by 8%. So they're saying, okay, we got that, labor hours, so smart. Okay, actual production quantity was equal to budgeted production quantity. Okay, we'll have to figure out what that, how they calculate that. So now we're going to have selling and administrative costs is estimated at 5% of revenue. So that means it must be, if it's relative to revenue, then it's basically a variable cost. Inflation is currently 6% per annum and is not expected to change in the near future. Okay. The new costing system, the accountant was contemplating using ABC for the 2020 budget to allocate fixed overheads to the units produced. After analyzing the processes, he identified the following key activities that drives fixed overhead. So in note number 1, note number 2, or whatever that is, activity. So we have activity, which is frame construction, foam and upholstery, ordering and delivery. The cost driver is weight of couch, labor hours for foam and upholstery, and then number of client interactions. The fixed cost allocation, 30%, 40%, and 25%. So they're saying in note number 1, the timber frame is made from locally sourced sustainable pine wood and reinforced with lightweight steel. The charge couch weighs 77 kilograms and smart couch weighs 90 kilograms. Okay, then they say, generally for each couch sold, the customer talks to sales representatives at least twice before placing an order. This is allowed with a call, this is followed with a call from the ordering department to confirm the order and delivery details. For Smart C, however, the after-sales service center will call each client 2 times to ensure customer satisfaction. The after-sales service center does not contact Charge C customers. Okay, so there you can see the number of calls. Okay, so that is, remember, it's a number of interactions, and part of the interactions will be your number of calls. So we're going to do part B. As we do the scenario, I'm going to give you a format for activity-based costing. I'll point out a few things you must be aware of. It's not applicable to this, but it may be applicable. They could have just slightly changed the scenario, change the required, and it would become applicable. That is why I'm going to show it to you one time, because it depends on how they ask the required. Okay, so I'll tell you what to look out for, and I'll give you a format and how to think through ABC. Okay, so remember, by covering this, we're going to cover traditional costing. We're going to be covering ABC. We're going to be covering variable costing and absorption costing. Variable costing and absorption costing is going to come through basically in every single MAC paper, costing paper you will come across. So variable and absorption, you must know inside out. Okay, nothing complicated. You just must keep your head up straight. Okay, so we're going to do part B. Part A we will cover next week when we deal with, I think it's next week, when we deal with CVP. CVP is a huge part of management accounting. Like I remember our lecturers used to tell us, if you did not deal with break even in an ITC exam, you must be worried because you probably missed it. Because in ITC, they don't always ask you directly for break even, but as part of an answer, they expected you to calculate a break even. That's how important break even is. So when we deal with the next week, you will see it's going to be a critical calculation. So you might just be aware of that. But for today, we're going to be dealing with part B. What's going to happen in part B, we may need some answers from part A. I will just give you that answer. And then next week, when we cover CVP, break even, then we will just make sure, we will just link them up to say, okay, here we calculated it now. And then you can see how it fits into what we need in part B. But for whatever is required from part A for part B, I'll just give you the answer and provide some form of context. Okay. So like I said, the required in cost of counting is not as straightforward as financial management. So please make sure you pay careful attention to subtleties in how they word the question. I'm going to read this. I'm going to read the required, and then I'll tell you what is important to pick up in that required, so that you don't calculate unnecessary things, and then also that you calculate what is actually asked of you. Okay, so they say calculate. So calculate means you must bring a number and you can do it however you want it, however you want to. Calculate the 2020 financial year budget. So when you look at cost accounting, there are three things you must be able to pick up. Whether they're asking you for actual information or budget information, that's number one, in no particular order. Number two, you want to be able to pick up whether they're asking you for an annual figure or monthly figures or a quarterly figure. So basically pick up the period. And the third thing, when you look at the date. Why is it important? Being able to identify the period, annual, quarterly, monthly, being able to identify whether it's actual versus budget, and to be able to identify the date, 2019, 2020, that helps you to identify which information you need to look through. Okay. In another question, if you look at your final exams, it's probably like 7 pages long, but there's a big, nice headings. So by you being able to pick up what information you need to, which data you need to use, you just look at those type of things. 2020 financial year budget. So now, in another scenario, it would have been very easy to pick it up here. This is everything is here, but basically we know we must utilize this over here. This is got to do with 2020. So this year, all the notes relates to the 2020 budgeted year. So please be aware, pick up the date, pick up whether you're dealing with budget or fixed. Because remember, another question, you can have actual and budget for 2020. So it's important to take note. In this case, only 2020 is budgeted. Okay, you don't have actual 2020, but just be aware of that. Okay, it's very important. And here you can see financial year. So you're looking for annual figures. So if they gave you monthly figures, you must convert it into annual. If they gave you annual, if they wanted monthly, but they're giving you annual, you need to convert into monthly. So please, subtle things that so that we miss that cost us the marks. Okay, so very important. Calculate what? 2020 financial year budgeted. Okay, we're happy, but what must we still calculate? Fixed production overheads. That is what we need to calculate. Fixed production overheads. They didn't ask you for the cost of a product. They're asking you for fixed production overheads. In other words, they're asking you for fixed manufacturing overheads. They're not asking for a cost of a product. Remember, the cost of a product is three things: direct material, direct labor, manufacturing overheads. Manufacturing overheads, variable and fixed depending on the costing system. What then? So they're not asking you for the cost of a product. If they asked you for a cost of a product, you must provide all three. What are they asking you for? One of those things: fixed production overheads or fixed manufacturing overheads. Next important aspect, per unit. They're not asking you for a total cost. They want a cost per unit. So per Smart C, per, what's the other one? What's the other one? Couch C, whatever it was called, whatever the other one was. So Smart C and what's the other one now? Couch C, whatever it's called, okay? So they want per unit. Okay, so remember they wanted total. Total could be on two different levels. Total per product or total for all products. So that means you must work out total for Smart C, work out total for the other one, and then get the combined total. So just be aware of that to be able to pick up when they ask you for a total, which total? Total for one product, total for each product individually, or the total of all the products. If they want total of all the products, you still need to work it out per product. That's the only way you're going to get it on a total level for all products. So once again, it's those small differences that we miss that cost us marks. So you may think I'm overdoing it over here. I'm not overdoing it. You're going to see that these type of things is going to play a critical role. Okay, so remember, per unit. Then they're saying based on the contemplated activity-based costing system. What you should know is that if I didn't say ABC, you assume traditional. You only use ABC when they tell you to use ABC. So here they say, and then they say, finally, compare it with the traditional costing method. What does that mean? We must work out the fixed overhead production for each unit. So a unit of Smart C, a unit of the other one, both on ABC as well as traditional, and then maybe see the difference and provide maybe a reason. You don't really have to provide a reason. They didn't ask you for a reason, but you just need to think of a reason, even if they ask you another question of a reason. Okay, so we're happy. In that, it's not as straightforward. Dear student, please calculate WACC. It's not as straightforward. This one, you need to have a look what exactly they're asking of you, because the same question, same scenario, same question they can do, but they just slightly change things. They can change it as opposed to having per unit, they went on a total level, things like that. Okay, instead of having 2020, they can ask you for 2019. You know, small, subtle difference, same required, small differences that can cost you 100% or 0%. Okay, so just keep that in mind. So now I'm going to go over into Excel, and then I'll give you a format to set up an activity-based costing question. While I open up Excel, do you have any questions from your side? Denise, Fakir, Velis, you're the three names I can see.
No questions.
No questions.
Okay. Ashita, Faid.
No questions.
Okay.
No questions.
No questions.
Nasreen. Larato. Okay, Tandy. Who's Lucky? Oh, well, let me just see. Larato, nothing. Okay, what do I want to do? Excel. Okay, so here we go into this cost accounting. So I know most people don't like cost accounting, but it's not that bad at all. It's less enjoyable than financial management. I love financial management, so I don't find costing as enjoyable, but I still enjoy costing. So you will see it's not as bad, but like I said, it's not maybe as intuitive as financial management. With cost accounting, here's going to be very important to try to pick a company, a manufacturing company that you know. So like for me, I always think of Coca-Cola. It was like here in Cape Town at school, we used to go to the Coke factory during school. I mean, you don't really exactly see what happens, but like that small piece that I see, I just try to picture. And I also like did stock counts at when I was in audit at Coca-Cola. And then I asked them just to go have a look what's happening, just to see the process happening. So I used to enjoy seeing processes happening. And then I could kind of, I mean, whatever I could see, I saw. But just to having that kind of picture in my mind, when I look at the manufacturing company, I just picture a Coca-Cola happening. Okay, so so choose something that you can relate to as well in terms of what goes into the production process, what comes out, things like that. Then once you start doing that and you can visualize a process happening, it's going to make your life slightly easier as opposed to being blank in terms of a picture of what's happening and just trying to look at it from an accounting perspective. If you just look at it from an accounting perspective, you you're not necessarily going to get cost accounting. You may get it from a theoretical point of view, but you're going to miss the bigger picture. So, so try to choose a company, get it to be a manufacturing company, because we are doing with a production process. So if you're in audit, try to use that. Otherwise, just try to think of something that will be useful to you, that you understand. You're going to see every time you work through a costing question and you try to think of that company that you know, and you try to relate your scenario to that as far as possible, not always going to work. You're going to see you slowly going to get a deeper understanding of cost accounting. It's not going to be as hard as you may think it is. So let's get into this. Remember what they ask us to do a calculation. What must we calculate? The production overheads per unit. So what do they want us to do? Calculate fixed production overheads per unit. Another term for fixed production overheads, fixed manufacturing overheads per unit. But they want it on two bases, ABC as well as traditional costing. So we're going to do ABC first, then we're going to do traditional costing. So it is calculate fixed manufacturing overheads per unit, basis ABC and traditional costing. Which data must we use? We must use the full financial year, the 2020 financial year budget. That's the data. So remember, you always have to find data somewhere. You must make sure that you're using the correct data. Which period, which year, and whether it's budgeted or actual. So they want the 2020 financial year and they want budgeted information. So please take note. Those are small things you'll pick up that will help you to use the correct information. Many of you have told me, and you know that even though it's not in cost accounting or in MAC, whatever, under the exam pressure, you sometimes use you're doing the right thing, but with the wrong information. So you're doing using A to calculate C and then C to calculate A. Whatever you're doing is correct, but the data you have used was incorrect. So, and then what happens? You can't get the marks because the examiner does not know you made that mistake, right? So just take note of that. It's those kind of small things that will help you in the exam to speed up your time management. So pick up those type of small things as you go along. Don't overcomplicate your life. Don't overthink things, but also don't underthink. Okay, so try to get into that habit of making sure which data you must use. For management accounting, cost accounting, it's going to help you significantly. You're going to see as we go along, it's going to help. So now I'm going to give you a table for activity-based costing. Remember, activity-based costing is only used to calculate or to allocate fixed manufacturing overheads. When you read a textbook, you will learn that activity-based costing can be used for all overheads, fixed and variable. So activity-based costing can be used for all overheads, fixed and variable, manufacturing and non-manufacturing, okay? But for our purposes, it's only going to be tested for fixed manufacturing, okay? So they're not going to use it for variable and they're not going to use it for non-manufacturing. They may, but hardly ever. So the big idea is it is used for fixed manufacturing overheads. Like I said, it can be used for any overheads, fixed and variable, manufacturing, non-manufacturing. So just be aware of that. But like I said, when you get the ABC question for our purposes, it is going to be to allocate fixed manufacturing overheads. So please be aware of that. So this question asks us for cost of a product. Asks us the cost per unit for fixed manufacturing overheads using ABC. So your first column is going to be activity. So you can use this as a table when you do activity-based costing. You're going to have your activity, then we're going to have our cost. They never gave us the cost. So we're going to have to work out the cost. Then you're going to have your driver, okay? Then we're going to have, I call it driver units, whatever you want to call it. Okay, and then we will have cost per driver. First column, column D, is not required to be put in your table, okay? But from my experience, it takes just a few extra minutes to bring that in. Because I'm thinking of the bigger picture, right? So I'm thinking of the bigger picture. You in an exam, under exam pressure, all of those type of stuff, you're going to be, ABC is going to be generally right at the bottom of the whole scenario. And by just I'll show you when we do the question, just having the actual driver in your staring in your face. When you plug in this number and you glance over to that, you'll be able to pick up whether you're making a mistake or not. It's very easy to make a mistake with the driver units. So to ensure, I use it as a, how can I say, a mechanism to ensure I don't put the wrong number in. I have my driver measurement over there. Because as I plug that in, I'm telling myself what I'm plugging in over here. And when I look over to that, my brain will kind of have a short circuit if the two of them don't match. But if the two of them do match, it carries on. You will see what I'm talking about when I go through it. It might be simple here because we're only doing ABC and we're not under an exam pressure. When you have an exam pressure, this column is extremely useful to have in, not required. So when you practice, you decide whether you want this column in or not. Every other column has to be there, okay? Then we'll have the next part. Then we'll have the next part. The next part would be, we'll put our products. I can't remember the names of the products. What was the names? It was Smart C and Charge C. That was what? Smart C and Charge C. So we have Charge C and we have Smart C. Okay, so this here is going to be driver units. And then here we're going to have cost. So if you have 3 products, you'll create another column for the products. Okay, so just be aware of that. Okay, so just be aware of that. So if you have another product, you just create another the same format for the other product. Okay, so just be aware of that. So now the first thing you have to do is put in your activity. The activity was given to us as, I cannot remember. There was 3 activities given to us, which was, where is this now? So we have frame construction, we have foam and upholstery, and we have ordering and delivery. Can someone just help me with that? So foam construction, foam construction, foam construction, frame construction, foam and upholstery, what was the other one? Order and delivery. Order and delivery. Okay, given to you. In most cases, it's going to be given to you. CTA 1 definitely given. CTA 2, I can't promise. Okay, what was also given is our driver. Okay, so our driver was, what was our driver now? Our driver was weight of couch, labor hours, number of client interactions. Weight of couch, weight of couch. What was the other one? Labor hours and number of client interactions. Number of client interactions. Okay, like I said, this column not required. Okay. Now the big numbers, okay, so we're gonna have to work out the cost. They never gave us the fixed overhead cost, so we're gonna have to get the total fixed overhead cost and then split it. Remember, they told us that in the scenario, the split is 30, 40, 25. When you add up 30, 40, 25, 30 plus 40 is 70%, plus 25 is 95%. So that means there's a remaining number over here. Okay, so we must insert. So we didn't know what it is, so we just call it remaining 5%. Okay, so we will see what it's called. There's nothing called, so we just call it remaining 5%, because it must add up to 100%. So in order to do the split now, we have to first work out the total fixed production overheads. Okay, we have to first work out the total fixed production overheads. So this is quite a bit of the marks will come from part A, but we're going to work it out. Okay. So the cost of production is note 2 and then closing inventory. Okay, so let's have a look. So they're telling you in note number 2, due to the production techniques expected to be implemented in 2020, the variable production cost will increase by 5%. Okay. In note number 4, they spoke about fixed manufacturing overheads. Okay, so they say fixed manufacturing overheads are currently allocated based on labor hours. Historically, the production process required 4 hours of labor hours and 8 hours for Smart C at 750 Rand per hour. Okay, so let's have a look. And then they say fixed overheads is budgeted to increase by 8% for the 2020 financial year. So do any of you know how we would get our fixed manufacturing overheads given note number 4? I'll give you 2 minutes to think about it, and then I'm going to ask you to provide, I'm going to ask any one of you to try to tell me, how do you think we can get our fixed manufacturing overheads? I'll give you 2 minutes. I'm going to fetch me some water. So when I come back, I will ask you to provide me some feedback. Okay. So give me some water, and then we're going to go through it. Anyone think how we can get fixed overheads? Anyone? Hello? Let's see who's here. Ashita, any idea? Bernice, Faid, Fakir, Ryan, any idea how we'll get fixed costs?
No idea.
Ryan, I remember you told me this is your favorite subject, cost accounting. Any idea?
This is costing is Ryan's favorite, yeah.
Not at the moment.
Okay, so let's start and think through it, right? I don't just want to give the answer. Fakir, you want to say something? Nasreen?
No, I'm okay.
Nasreen?
No, I'll wait for you to go first.
Okay, so let's just think through this. Okay, so remember, we need to calculate fixed manufacturing overheads. So the question is, how are we going to get that? So remember, they would have fixed manufacturing overheads calculated in a certain way because they knew what fixed manufacturing overheads is, and they would get it in a certain way. So they have a certain number. So they already know what fixed manufacturing overheads is. And now we need to take that fixed manufacturing overheads number and split it in the ratios they gave us. But the question is, what is that fixed manufacturing overheads number? The only way we can get it is using the traditional costing method approach, because given whatever information they gave us. Because remember, in order to get the traditional costing method numbers, they needed to know what fixed manufacturing overheads are or is. The company knows what are their fixed costs. They're not guessing it. They know what is the fixed manufacturing overheads. And then they take that fixed manufacturing overheads and allocate it on some ratio or some basis. Now, they're just asking us to get back to the fixed manufacturing overheads number that the company knows. In another exam, they're most likely given it to you. Why didn't they give it to you over here? Because remember, the accounting records have been burned down. So based on whatever information they had available, what was left over via the email, we will have to reconstruct your fixed manufacturing overheads number. So just keep that in mind. Okay, so let's have a look how we would get the fixed manufacturing overheads number. What do you guys see? Do you see Excel? What do you see? You see Excel, or I don't know, are you on my screen? Are you on Zoom? Let's see, what do I have?
We can see Excel.
Excel. Okay,
Excel.
cool. So to do the traditional costing method, I just wanted to show you something so you know how this works. So when you use the traditional costing method, fixed manufacturing overheads that you apply is as follows. You apply fixed manufacturing overheads. So using the So using the traditional costing method, to allocate fixed manufacturing overheads to a product, we need to calculate fixed overheads applied. Okay, so we need to calculate fixed overheads applied. Now, fixed overheads applied equals, what's it called now? Fixed overhead rate. Another term that they use is your predetermined overhead rate multiplied by actual activity. Okay, so multiplied by activity. Now, the term activity refers to the basis of allocating overheads. Remember, your basis of allocating overheads could either be an input or it could be an output. If it's an output, it is units produced. If it's an input, it would either be labor hours, labor costs, machine hours, material costs, something that goes into the production. So activity refers to your basis of allocating overheads. Now, now you can see the amount that we allocate to fixed overheads, the amount we allocate for fixed overheads to a product is based on your fixed overheads applied. Fixed overheads applied is your fixed overhead rate or your predetermined rate multiplied by activity. Take note, predetermined. It is you determine the rate at the beginning of the year already. Now the question is, how do we get this predetermined overhead rate or this fixed overhead rate? So fixed overhead rate or predetermined overhead rate is budgeted costs, referring to budgeted fixed costs, divided by budgeted activity. So remember, your activity refers to what now? Your basis of allocating overheads. So just be aware of that. So remember what the overhead rate they gave us. They told us that the overhead rate is 750 Rand. We know what is our activity. It is labor hours. So all we have to do is to get total labor hours. So all we have to do is to get total labor hours. We need to get your total budgeted activity. What is our activity? Our basis for allocating overheads. So how are we allocating overheads using the traditional costing method? Labor hours. So all we need to get is to get our budgeted labor hours. We know the fixed overhead rate, it's 750 Rand. In that way, we will be able to work out our budgeted costs. But now remember, the activity we can use is for 2019. By doing that, we will get our fixed overhead rate of 750 and we'll get a budgeted cost, which is a budgeted cost for 2019. But we don't want 2019's budgeted costs. We want 2020, but what did they tell us? 2020, just 8% of 8% increase on 2019. So what I want you to know, there's going to be various formulas you must be aware of. You must know traditional costing and so forth. but this is how they're going to bring through traditional costing. This is how they're going to bring through activity-based costing. I mean, this is how they're going to bring through variable costing and absorption costing. Remember, one of the key skills required for people in the of the 21st century. So if you Google 21st century top skills, probably the World Economic Forum will pop up, and then I'll give you the list of the top skills. Two of the top skills, there's I think about 10 or 20 top skills that they list, the top 10 or the top 20, can I remember? Two out of the top 10 or top 20 is 1, critical thinking, and 2, problem solving. Now, as a chartered accountant, one of these days, they're not going to require you to do accounting with blockchain technology and all of these technologies. Soon, our jobs are going to be automated. But what they're going to require you for, your thinking skills. So SAICA knows that. And that is why SAICA continuously update their competency framework so that they make sure that the future CA is still going to be top. Remember, SAICA is second in the world. CASA ranked second in the world. Number 1, I think, is Canada. And then South Africa and Switzerland switch places, second, third, second, third, second, third. So what makes SAICA so good is that despite the fact that we're one of the top in the world currently, they don't sit still. They continuously have a look how they can improve the profession. So from CAs around the world, Canada number 1, or actually I think, yeah, and then Switzerland, South Africa, right? Something like that. Now, so SAICA knows the future CA is not the current CA. There's going to be lots of technology, fourth industrial revolution, and so forth. So when blockchain comes in and all of those type of things is mass produced, whatever, and our jobs are automated, Xero automates a lot of the accounting processes. Soon, we're not going to do bookkeeping and stuff like that. So what are you going to be required for? You're going to be required to analyze information that the computer cannot analyze. So part of that is bringing in this problem-solving skills. So you need to practice how you're going to learn to solve certain problems. This is a good example of solving a particular problem. Why I'm helping you with it, because you would have probably figured it out if you had to do part A first. Okay, so I know we're just jumping into part B, so that kind of hinders the thinking process. But what you might just, after this, you might just make sure that they're going to throw this thing a lot into your face, okay, where they're going to give you one number or two numbers, and you must remanufacture the other number without them spelling it out to you. And that is a skill that they are testing. That is a skill that they are trying to help you develop, and that is a problem-solving skill. Okay, so just be aware that I've tutored this now for quite a few people in the current year. I did Milpark, I did you guys, undergrad, UNISA, University of Pretoria, and so forth, right? So, and all the time they're using this, where they're giving you something of the traditional costing, and you need to use that formula to reproduce something that you might not have thought about. So over here, we need it for activity-based costing. So please be aware that they use these two formulas quite extensively, not in the way that we expect it to be used, but rather to work out a number that is missing. So please make that, be aware, put that on a high alert for yourself. Because I've seen it now, like probably in the last 3 months, it's been a repeat, on repeat, that you need to work out one of these numbers, whether it's a fixed overhead rate, whether it's the fixed cost, or whether it is the budgeted activity. So please be aware, you need that to do something else. So over here, we need budgeted costs, we need fixed overheads, of 2019 to get fixed overheads of 2020 so that we can do the activity-based costing. So please be aware, it is multiple levels of thinking. Okay, so let's work through this now. So now we have a base. We know what is the fixed overhead rate. It is 750 Rand per hour. We will be able to work out the budgeted activity. Remember, these are total budgeted activity, total budgeted costs. What is our budgeted activity? Our activity refers to the basis of allocating overheads. What is it? It is labor hours. We know for charge C, it takes 4 hours, I think. And then for smart C, it takes 8 hours. I think if I got the numbers right. So, but that is per unit. We don't want it per unit. We want total. Okay, so therefore, how are we going to get the total budgeted costs? I mean, the total budgeted hours. So remember that how we're going to get total is by saying 4 hours of Smart C per unit produced multiplied by the total number of units produced in 2019. 8 hours per unit for Smart C multiplied by the total number of units produced for Smart C in 2019. So that means the next step is to work out the total number of units to be produced. Okay, so let's have a look. I mean, not to be produced, the total number of units that were produced in 2019. So let's have a look. If I just do this over here, workings. So what you're going to see, that the work is not going to be difficult. It is just that you're going to have to ensure that you get your level of thinking get up. Okay, so for working one, we want to work out fixed costs. Okay, so what is fixed costs? So remember, the way we're going to work out fixed costs is by rearranging the fixed overhead formula. Okay, so fixed overhead rate equals budgeted fixed costs divided by budgeted activity. So remember, these budgeted fixed costs and the budgeted activity is on a total level, budgeted activity. Now, if I rearrange this formula, you will understand that fixed costs is equal to what? So fixed cost is equal to fixed overhead rate multiplied by budgeted activity. Okay, so multiplied by activity. So just take note of that. So therefore, I want fixed costs. I want, okay, so let me just say I want fixed overhead rate. I want activity. So remember, you can just tell them that you know activity is our labor hours. Okay, and then that's going to give me my fixed overheads. Which fixed overheads is going to result in 2019? We don't want 2019, remember? We want 2020. So this is going to be charge C and smart C, and that's going to be total. So let's have a look. We know the fixed overhead rate, 750. 750. Okay. We're going to need to get our activity, our labor hours. So remember, our labor hours, we want total labor hours. We know it's 4 hours and 8 hours, but that is per unit. We need it on a total level. So we need total units produced. Now remember, in one of the notes, I think note 4, or yeah, I think note 4 or note 3, they told us that the company usually don't have opening and closing inventory. But in 2019, they did have closing inventory. Why? Because there was some, they never met the sales target for whatever reason, right? So for charge C, there was 10% left over, and smart C, there was 14% left over. So if they, what now? What did I just say now? So if they, whatever was sold is less than what was actually produced. So remember, what they produce would generally equal to what they sell. But in this case, they produced and never sold everything. We know what they sold. We know the percentage that is left over. So therefore, we will be able to work out how much was actually produced. Okay, so just take note of that. We know what was sold, and we know what was left over. As a result, we will be able to work out what was actually produced. So if I do that in working 2, just so you know, I'm doing this over here. This calculation actually being calculated in part A. Okay, so this same answer we'll use in part A. And then when you come to part B, you just bring through part A's answer into part B. So that is why it seems a little bit complex. Okay, so units produced. So units sold in, what was units sold now? So units sold was what? In 2019, it told us somewhere. The budgeted sales units in 2020 will be the same as the actual sales attained in 2019, 243 and 129. Okay, so 243 and 129. So 243 and 129. So if I go back there, so units sold 243, 129. But you know, this was 10% short for what was produced. This was 14% short. So what does this represent? Okay, so this is basically percentage, if I can just what you want to call it. This represents 90% of production. Okay, and that is, so if I just show you, they produced 100, they expected to have 100%, but they were 10% short. Similarly over here, they expected 100%, but they were 14% short. So what we will be able to do, so we were able to get the units produced. So all we'll just say, units sold divided by 90%. Okay, so units produced 2019. So it'll be 243. That's what they actually sold, but it represents 90% of what was actually produced. So we actually produced 270. We sold 129, but that represents 86% of what is produced. So therefore, we actually produced 250. Okay, so that is the units produced. So our total units produced in 2019 is the sum. Okay, that's total units produced. Now we know labor hours per unit. You can just check if I have the right way around. 4 and 8. Someone can just check for me if I got it the right way around. So this will give us total labor hours. Total labor hours. Okay, so total labor hours, 270 times 4 and 150 times 8. So if I add it all up, we will get that amount of labor hours. So now I can just go plug this in. So there we go. It is that. It is that. So if I say 750 multiplied by 1080, it's 810,000. So therefore, the fixed overheads for 2019 is the sum. Okay, so the fixed overheads for 2019 is that sum. However, we don't want 2019. What do we want? We want 2020. So fixed overheads 2020, we're going to grow it by 8%. So we're going to grow it by 8%. So it's equal to that multiplied by 1 plus 8%. So that is our fixed overheads for 2020. Okay, increased by 8%. That was given to us. Okay, so there we have our fixed overheads. That's our total fixed overheads. But now we're going to have to split it up between the various categories. Okay, so remember, 18, it was, what was it now? 30, 40. Can someone just help me with the split? So I think it was 30% for frame. So we're going to say that multiplied by 30%. Just tell me if I have the right percentages. What was the next percentage? Anyone?
40%.
40%. Okay, so 30. Okay, then it was 40% times 40%. It was 25%. That times 25%. Now remember that only adds up to 95%. So you have to assume that there's a remaining percentage of 5%, but you have to split 100%. Okay, so when we add up a total, it must add up to what we calculated in working. So that is working 1. Okay, so there we have that part. Now we must get the driver units and the cost per driver. Once we get the driver units, we will then work out the cost per driver. Okay, so let's have a look at the weight of each couch. So remember, they told us that the weight of the couch is 77 and 90, I think. But we must work it out. You have to work it out on a total level. So it's best to work out your cost driver on a total level. Okay. So we need to work out what are the units that is expected to be produced in 2020. Okay, so what is the units expected to be produced? Units to be produced in 2020. So remember what we're going to be doing. We're going to say opening. No, I think they gave us units produced in 2020. No. Let me just see quickly. What did I just read? What did they just say? the budgeted sales for 2020 is the same as the actual sales attained in 2019. Okay, that's what they said. Okay, so here we're going to have opening. So remember, if you have a look at the cost of sales formula, cost of sales equals opening plus purchases or plus production minus closing. Okay, so we're looking for the P, production. So therefore, production is equal to cost of sales, which is your sales, minus opening plus closing. Okay, so to get production, it is going to be sales plus closing less opening. Okay, so that will give us our production. So this will give us our production using this formula. This formula is very useful, so just make sure. Okay, so this is budgeted production. Remember, our budgeted sales was our actual sales of 2019. Our budgeted sales is our actual sales of 2019. Remember, they said that closing 2019's closing balance is 10% of, is 10 and 14% of units produced. Okay, so just take note of that. So here it's going to be negative. So remember, there was 10% left over, or whatever was produced in, what did I just do? Okay. Multiplied by 10% of what was produced. So that is our opening balance. Remember, last year's closing balance is 2019's closing balance is 2020's opening balance. They said they expect no closing balance. Okay, so therefore we're making it 0. And then this one is going to be 14% of what was actually produced. What was produced times 14%. Okay, so therefore, because remember they're saying we're going to our budgeted sales is equal to our actual sales of 2019. But what we produced in 2020 must result in all our budgeted sales being sold without having any closing inventory. Now we know we have opening inventory, so therefore our production will not equal to sales because we have opening inventory and we don't want any closing inventory left over. Okay, so we just say sum all of this. You can see we're only going to produce 216 and 108. Okay, so we're only going to produce 216 and 108 of those items. Okay, so now we can do what we want to calculate. So we need to calculate the total weight. Okay, so we need to calculate the total weight. So we have details. So we have budgeted production, which is going to be that. So we have budgeted production. Then we're going to say weight per product. So just make sure if I got the numbers right. Okay, you can just tell me if I get anything wrong. So 77 per unit is 77 kilograms, and then for that one it is 90 kilograms per unit. So this will give us our total. So it's going to be total weight. Okay, so it's going to be that amount multiplied by 77. Then we're going to just say the sum. So now we can go and plug that in. What is this? It is E42. So if I go over here to my actual driver units, it's equal to E42. Immediately, just go plug in over there. Charge C accounts for 16,000 and Smart C accounts for the other, no, whatever this is, what is that? Smart C accounts for 9,000. So just make sure you just one time go plug it in. Okay, so remember the cost driver is going to be total costs divided by total driver units. So here you can see weight of couch. This is weight of couch. That's what I'm trying to tell you. You want to just double check that what you have over here corresponds to the driver. The driver is weight of couch. This is based on weight of couch. So I know I'm happy. As I'm doing my question without thinking, my subconscious mind is checking that. Okay, I'm not consciously checking it, but because I consistently, every time I do the question, I check it out, my brain automatically checks it for me. The moment this does not correspond with that, a short circuit happens and it tells me something is wrong without me consciously thinking about it. So you don't have to have this, but I'm going to tell you, there's going to be a time you can do most likely get that wrong in terms of whatever you calculate does not correspond to your driver. So that's why I just have it in there. It saved me many marks. Okay, so that is what I get for my cost driver. Immediately, I'll go add it, I'll work it out. So it is cost driver times units cost driver times units. So what do we see is that what you notice over here is that of, let me just quickly do this. So of this over here, of the 554, 349 is allocated to charge C and 204 is allocated to Smart C. But you might just know that that minus the sum of that, and that must obviously comes to 0. Okay, it should always be 0. This is just, you don't do this. I just do this check for myself. So I'm using Excel because sometimes I make mistakes along the way. So that's how I pick up if I make a mistake. I'm using Excel. You can't do that in an exam. You're going to waste your time unless you're having Excel. But if you're writing out, don't do that check. Okay, so that is that. Now for upholstery, where was that? Now for upholstery, it was labor hours. I'm going to check if it's still the same. So, okay, labor hours. So it'll be the same. It's going to be still 4 hours and 8 hours. So you do the same calculation. So over here, we just say working for. Okay, then we go over here, working 5. I just copy this over because they remain the same. Okay, so they remain the same, but now it's going to be labor hours per unit. There we go. That still stays the same. I copy and paste. I don't think the labor hours change. I don't recall them saying anything. So now if I get the total, so I'm going to say total. So it's going to be 216 multiplied by 4 and drag that across. I'm going to say sum so this is EDC 47. Okay, so over here it is going to be equal to E47. So that's the total labor hours, labor hours. I'm happy. My subconscious mind is checking it for me. Okay. So there's no short circuit in my mind because the two correspond. Okay. That here is working 5. That total cost divided by cost driver. And I'll just bring this in. So this is C47. You can just check, should be right. And this here is D47. Okay. So remember, I'm just going to drag this down. I'm going to drag that down just to check the formula. So you can see the formula is right. It's taking the cost driver per unit multiplied by 864. And then what? Same thing over there. Okay. If I do that check here on the side, if I do the check, it is 0. So I'm happy. It appears to be correct. Okay, now I do the next thing which is client interactions. Okay, so working 6. So here's going to be the number of interactions. Okay, and once again, it's based on a product. So we just read the interactions again. It tells you, where was this now? Yeah. Generally, for each couch sold, the customer talks to a sales representative at least twice before placing an order. So for each couch. 2. This is followed with a call from the ordering department to confirm the order and delivery details. Okay. This is followed with a call. Okay. So that is 2 calls before, 1 call for order and whatever delivery details. Then they say for Smart C, the after-sales service center will call each client 2 times to ensure customer satisfaction. The after-sales service does not contact with charge C. Okay, so there, if we have a look, so here we can have budgeted production, client interactions. So remember now, this is not based on units produced. This is based on units sold. Okay, so remember how many units are being sold. So units sold, we will go fetch it. Because when we produce something, there's no client we're interacting with. Okay, where's this now? Where's units sold? Okay, so units sold is going to be that. Remember, we're selling all units. Okay, so just be aware. We're not using units of production because we're not going to contact a client when we produce something. We're interacting with a client when we make a sale. Number of interactions. Just to make it more clear, it's not any interactions. It is client interactions. For charge C, it is 2. The client contacts the company twice, and then the company contacts the client once. So that is 3. For let me just do it like this. It is equal to 2 plus 1. For Smart C, the client contacts the customer contacts us twice. Then we phone them once for order details and delivery details. And then after that, we contact them twice for after service. Okay, so therefore, for each sale, it is 3 and 5. So then we get our total. Okay, so now we will get our total. You can just copy that. So this is 52. Okay, so here we go, equal to E52. If I drag this down, it's going to give us a cost per driver. So you just have a look, it is that divided by that. This is equal to D52. And that is going to equal to, no, this one is C52 equal to C52. And this one will be equal to D52. So let me make sure I got that right. 729, 645, happy. Okay, so then I can just drag this down, which is going to multiply if I just show you. So let's say cost per driver times units driver, same thing over there. Okay, so we just do that, drag it down. Okay, so that would be 92, 3, 4. Okay, so there. Now we might just do the last one. Okay, so the last one, you might just, because it only came out to be 95, right? All we'll just have to do, we will assume that 5%, because it is so insignificant, we will base it simply based on the traditional costing method. So remember that the traditional costing method is based on labor hours. Okay, so the traditional costing method is based on labor hours. So the labor hour, so we just use the same, we can just use the same, whatever the labor hours is in terms of what we calculated for the upholstery. Okay. Let's do. Okay, so what we will do for, I'll just use labor hours. Why are we going to say labor hours? Because we have to assume the traditional costing method. Okay, so by using the traditional costing method, the labor hours, that is labor hours. So we can just assume it's going to equal to that. If I draw this down, okay, and that will just equal whatever the labor hours is. Okay, so this here is working 6. So that's working 6. So if I just drag this down, same formula. Okay, now we can work out the total. So the total will just be the sum. And this would be the sum. If I use the same formula over here, if I drag this formula down, you can see we allocated everything. So all the fixed costs, 1 million is allocated to charge C, and 800 is going to be allocated to Smart C. But they didn't want total cost. They said fixed costs per unit. So therefore, we must divide by units produced. So remember, we worked out units produced. I don't know where I worked it out. Units produced is going to be that. So it's C37. Okay, so C37. This one would be equal to D37. D37. Okay, I just want to tell them where I got that number from. I'll tell them got it from working 3. So in the event it is wrong, they can go see where we went wrong. But remember, we trust ourselves, so we know it's right. Or we believe it's right. So therefore, cost per unit, it's going to be that divided by that. Cost per unit is going to be that. So this is cost per unit. So using their activity-based costing, using ABC. So using ABC, we should be allocating. So using the ABC method, we should be allocating 4,000. So cost per unit, ABC. Okay. So remember, this is fixed cost per unit. So this is fixed cost per unit. So just understand this here is fixed cost per unit. Then if we want to have a look at traditional, if I just do this, fixed cost per unit, but using the traditional costing method, traditional costing. So remember, traditional costing is using labor hours. Okay, so it's using labor hours. So remember, for charge C, the labor hours is 4, and it is 750 per labor hour. For Smart C, the labor hours is 8 multiplied by 750 per labor hour. So as you can see, what is happening, we are under allocating. Okay, so we are under allocating. So there's the difference. So there's the difference. Traditional minus, we are short 167, 1.6 I mean, and we are short with 1.7. So the traditional costing method is not allocating sufficiently. So that means we are basically under costing our inventory. Okay, so by under costing your cost of your product, it could impact your profitability because your cost is lower, so you think you can charge a lower price, but in effect, you actually, as a result of just allocating, you're under allocating. So that is basically what ABC is pointing out. Okay, so I'm going to stop there. That's ABC. That should be the what you could do. We'll just check some of the answers, but you guys can check if you find any error. Just let me know. What could be a problem is maybe this one, client interactions, because it's got to do with how they maybe allocate. Remember what I used over here? I'm going to make it in orange. Orange means it's amber, which means it's need to be checked. I used number of sales. Okay, so it depends now. So we're saying number of sales. So I'm saying, okay, I'm using number of sales because client interactions is only based on the sale you make. If you're not making a sale, can there be a client interaction? No. However, someone may use units produced. Why? Because we're working out fixed overheads. Fixed overheads is allocated to units produced, not necessarily on units sold. So that is what we'll have to have a look. I never checked the solution, so we can have a look. I'll check tomorrow or so, and then we can see. If there is a difference, I'll let you know. But just let me just explain again. I used units sold because I'm saying you can't have a client interaction if there's no unit sold. Okay, so you only incur that cost if there's a unit sold. But someone else can argue that, someone else will argue to say, hang on, we are busy with fixed overheads. Fixed overheads is a production cost. So surely we should use production units produced. So you see the difference in argument. I don't know which one is right. We'll see what UNISA have, and we'll see there's an explanation. I don't know if there is only one answer, but do you understand? This is now real stuff. It's not undergrad where there must be a right answer. This is real stuff. In the real world, we'll encounter this. You will be asked these type of questions. So we'll see which one to use, and if you can use anyone or you must use units produced. Okay, so just be aware of that. I'll check it out tomorrow and then I'll let you know. Do you guys have any questions for me? If no, we can go. But any questions? No questions? Bernice, Faid, Fakir?
No question.
Nasreen, Ryan, Felice?
No questions.
Okay. Bernice?
No questions.
Okay. Felice?
No questions.
Okay. Okay, so we are okay. So all good then. I'll stop here. I will upload this by tomorrow. Okay, then I'll send it out. Remember, there's some homework activities. I'll tell you which one is due. I'll send you an email tomorrow to tell you which one is due for next week. Okay. Bye bye.
Thanks, man.
Okay. Bye bye.